Have you ever looked at a candlestick chart and felt like it was speaking in some kind of alien language? Those little lines and boxes, what could they possibly mean? Are they some cryptic messages from the stock gods, or just fancy decorations on the market dashboard? Well, today we're going to demystify these mysterious lines. By the end, you'll know exactly what those candlesticks are saying. So let's dive in and unravel this chart together. Here's a quick example of what I mean. Imagine you're looking at the price history for Apple stock over the last day. You see a series of candles, right? Each one tells us something important about how the market behaved during that hour, or even minute. And here's the surprising part. Each candlestick is like a little story about the day's trading action. The body of the candle shows the range between the opening and closing prices. So if you see a big green candle, it means Apple stock closed higher than where it opened. That's good news for investors who bought in at the start. But wait, there's more. The wick on top and bottom gives us even more information. If there's a long upper wick like this, draws an imaginary line. It tells us that after the opening price was set, prices shot up but then came back down before closing time. So not everyone who bought at the start held onto their gains. Now, let's break it down further. Each day starts with a dot showing the opening price and ends with another dot for the closing price. If the market is trending upward, you'll often see more green candles than red ones. And if the trend is downward, there'll be more red candles. But what happens when we have those little lines extending above or below the body? Those are called shadows or wicks. They tell us about the highest and lowest prices during that time period. So if you see a small lower wick and a big upper wick, it means the price surged but then retreated before closing. All right. Let's dive into those mysterious candlestick charts. Have you ever wondered exactly what they're showing? Well, think of each candle as a character in its own little story. Imagine each candle is a day in the life of our market friend. Now look at this part of the chart, a single candle here. Let's pretend it's a sunny day with clear skies, perfect for trading. The body of the candle shows what happened during that day. If the body is filled in like sunshine, that means prices went up by the end of the day compared to where they started. But if the body has an empty space, like a cloud covering the sun, that means prices dropped. And here's the surprising part. Those little lines above and below the candle, they're like the shadows cast by our market friend. The top line shows the highest price hit during the day, while the bottom one shows the lowest price. It's just like when you're standing in a shadow. Some parts are darker than others. So, if we put it all together, each candle is telling its own story about how prices moved over that particular day. And just like reading a book, you can piece these stories together to see the bigger picture of what's happening in the market. All right, so we've talked about candlesticks as a day in the life of a stock or cryptocurrency's price. But what exactly do those little lines, those wicks and shadows, tell us? Let's dive into that. First up is the wick on top. This shows you the highest price the asset reached during the trading session, no matter how briefly. Imagine it as the peak of a mountain, the summit. Just like if you were hiking and you finally made it to the very top. That's where the wick sits in your candlestick chart. And here's the surprising part. The shadow below shows the lowest price the asset hit during the session. Think of this shadow as the trail left behind after you descended from the peak. It tells us how low prices fell relative to the day's high. So, when we look at a candlestick with a long wick and short lower shadow, it means that while the market tried to push the price up really high, it couldn't hold on and dropped back down a lot. Conversely, if the lower shadow is longer than the upper one or non-existent, it suggests prices stayed mostly low all day. These wicks and shadows together paint a vivid picture of how bumpy the trading was that day. They're like the road markers showing us where the asset's price went to, allowing us to see its full range of movement. All right, so we've been talking about these wick and shadow parts of the candlestick chart, but there's more to it than just those lines and dots. Now, let's talk about green and red candles. You know how a traffic light works? Green means go, red means stop. In a candlestick chart, it's the same idea. A green candle means prices closed higher than they opened. Think of it as the market going in your favor, like hitting a green light to keep moving forward. And a red candle means prices closed lower than they started. The market has stopped or even gone back, similar to hitting a red light. And here's the surprising part. The color can tell you who's winning in this little game of price fluctuations. For instance, if you see lots of green candles over time, it might mean that buyers are more active and pushing prices up. Conversely, a series of red candles might suggest sellers are dominating, pulling prices down. It's like keeping score in a tennis match. Each point, or candle, tells you which player is currently ahead. And just as in sports, sometimes the game can turn quickly. A bunch of green candles might be followed by several red ones, showing that market sentiment can change rapidly. So next time you see a green or red candle on your chart, remember, it's not just a color. It's a signal telling you which direction the market has moved and which way it might go soon. And here's the surprising part. Candlestick charts don't just show us who's winning with green and red bars. They give us a sneak peek into what happens behind the scenes in the market all day long. Imagine you're opening a pizza parlor, and every day you record how many pizzas you start making, that's your open, and how many you end up selling, that's your close. The difference between those two numbers tells you something important about that whole day at work. In the world of candlesticks, the bottom of each body shows where the price started for the day, just like the number of pizzas you began with. And the top of the body is where it ended up by the end of the trading session, like how many pizzas you sold. So if we have a green candlestick, think of it as a busy pizza parlor at night. It means that at the star bottom, there were very few orders for pizzas, but by the closing time, top, people came in and gobbled them all up. The longer the bottom part is below the open, the more the price fell before the end. And if we have a red candlestick, it's like having an empty pizza parlor. At the start of the day, bottom, there were lots of orders for pizzas. But by closing time, top, nobody wanted any anymore. The longer the top part reaches up above the open, the more the price rose before the end. By understanding these opens and closes, we can see not just who won or lost that day, but also what kind of pressure was on the market throughout the session. Whether there were early doubts, bottom-heavy candle, or late hope, top-heavy candle, it all adds to our picture of how the market felt during those hours. Now you know, candlestick charts are like a diary of each trading session. They tell us about price movements and market sentiment. Imagine you're on an airplane flying through the clouds, and you want to keep track of how smooth your journey is. Each candlestick chart is like a snapshot of your flight, showing whether everything's going up smoothly or bumpily. Let's break it down step by step. The main part of the candle is called the body. This tells us about today's closing price compared to its opening price. If the body is filled in, it means the stock, coin, or index closed higher than where it opened, like a sunny day after a gloomy morning. If the body is hollow, it's the opposite, closed lower, like a cloudy afternoon after a bright start. The thin lines above and below the body are called wicks. They show you the highest and lowest prices reached during that session. Think of them as the peaks and valleys of your flight. If there's a long wick, it means the price moved a lot but finished close to its opening, like turbulence on an otherwise smooth journey. And here's the surprising part. Candlestick charts can also be grouped by time period, daily, hourly, or even intraday. This allows us to see patterns over different durations. For example, if you're looking at a daily candle chart and see several green candles in a row, it might indicate an upward trend. But if those same days have long wicks, it shows that while the market is trending higher, there's still plenty of price volatility. Looking at these charts gives us insights into what traders are thinking. A bunch of green candles can mean people are optimistic and buying. Conversely, a series of red candles suggest pessimism and selling pressure. The wicks help us understand the range within which prices moved, showing how much volatility there is. So, why do traders love candlestick charts? Because they combine price information and sentiment into one easy-to-understand format. They're like real-time flight trackers for the stock market. If you're trying to make sense of what's happening in a given market, these charts give you that bird's-eye view. Now, if you'll never look at a plane the same way again because you can understand its journey, how about you subscribe to this channel and decode more market mysteries? Every video is your chance to step into the cockpit of the financial world and fly with us.